Scott, we've just been looking at your figures for the last year and it looks as though you've had a very successful year, turnover up by about 13%. Talk us through some of the highs of the last year.
Yeah, we're really pleased with that result. 13% growth in 12-13 on the back of growth of, I think it was 11% in 11-12. So we're really pleased with that. I mean, obviously there's a mixed picture when you sort of dig below the surface. I suppose the key highlights are that our advisory business grew by about 21% and the audit business grew by about 9%. Part of that was to do with the public sector audit acquisition that we made about 12 months ago. Tax was flat, but actually that wasn't a bad result given there weren't many transactions around, which obviously affects the tax practice. So overall, yeah, we're very pleased with the results.
And you've actually, the tax is an interesting one because you've published for the first time the amount of tax contribution. Do you think that the tax debate this year has been a good thing? It's brought a lot of that discussion about tax out into the open.
I think it's an important debate to have. I think there's been a lot of sort of misinformation out there around the tax avoidance debate, but I think it's a healthy thing to talk about. We've sort of given our own views about tax avoidance, and I think it is important to have that debate. But I think sometimes it can be dominated by just sort of sound bites in the press about, you know, this company avoiding this amount of tax and getting it mixed up with very legitimate sort of tax saving ideas that are promoted by the government.
And you mentioned audit having done particularly well. The audit service line's up 9.2% in the last year. How do you see the debate about audit competition going? Are you pleased with the way that it's progressing? We've
had a view on audit competition and choice, and really what we've been saying is here are some things that could be done to improve competition and choice if that's what the regulators want to do. So we've taken an active part in the debate. I mean, it's clear now to me that whatever the regulators do, that there is a mood in the market that says we will use firms other than the large four. So I think there is some mood music around now that's having an impact on loosening up the audit market, particularly for larger corporates.
Yeah, and it's interesting because you already do a lot of work with FTSE 100 companies in other areas. Yeah. And I suppose some people would say, does it matter if you don't do the audits for the larger companies? Yeah.
Well, I mean, our strategy over the last 5 or 6 years has been to really lead with our advisory practice in terms of trying to win more business in the FTSE 100, indeed the FTSE 250. I think we've got fee-paying relationships with probably about 39 or 40% of the FTSE 100 now. So mainly tax or pensions advice or restructuring advice and so on. So mainly advisory. So that's been our very clear strategy. And when we've been asked by the regulators and the commentators about how the audit market could be loosened up, then we've taken part in the debate. And certainly we're interested in getting involved in larger audits if the market is willing to use firms outside of the large four.
Okay. And looking at the market generally, there's been a lot of consolidation in the last few years, notably in the mid-tier level. We've seen BDO and PKF and then Tennant and Baker Tilly deals. Where do you see Grant Thornton's position? Would you be looking at a similar sort of merger, or would the growth be more organic?
Yeah. I think at the moment our strategy is very clearly to invest in niche areas or more sort of advisory areas rather than going for a sort of bulking up strategy across audit and tax. So we have made quite a few acquisitions in the last 5 or 6 years. They've been sort of under the radar, sort of boutique type acquisitions. We've also recruited a number of teams of people from other firms. So we've chosen not to go after a sort of bulk deal, and we've driven organic growth on the back of, you know, some smaller acquisitions. So I mean, we're very happy with where we are. I mean, we're, you know, at 471 million revenues. We are in a very strong position, I think, relative to the competition.
Do you think that the mergers are a good thing, consolidation are a good thing for the market?
I think consolidation is almost inevitable, and actually once you look at the league tables, if you like, and you get outside of the top 6 or 7, then the size of businesses fall away quite significantly, and it's difficult to see where there'll be any more very significant consolidation, but there may be sort of smaller deals now as we go through the next couple of years. But we're certainly not looking right now at any kind of bulking up deal.
Okay, and very successful year last year. How do you see the year ahead? Do you think that the main pressures will be the wider economic conditions, or do you think that we've past the worst of it?
I mean, it looks like the economy is starting to improve. I mean, it's still very mixed picture, but it is improving, and we're certainly seeing bigger pipelines, if you like, in our corporate finance advisory business now. So we think the economy will help, but it's not going to be a walk in the park in terms of the economy sort of boosting firms' revenues. I mean, we're expecting to get beyond 500 million for the year that's just started, and our target was to get to 500 million in 2015, but we think we'll hit that target a year early. And I think our growth will continue to be in parts of the public sector audit market and also across advisory, and we think tax will start to recover as there are more transactions going on.
Grant Thornton has done very well in various studies about graduates and how happy graduates are at the firm. Do you think you would look to introduce quotas or any kind of target about diversity for the future of the business?
We don't really believe in the whole sort of idea of having targets. I think it's a pretty false way of dealing with these things. What we prefer to do, and we've done this for a number of years, is promote sort of role models within the business. So Sasha Romanovich is on my board. She's very high profile in the profession. Our global head of tax is Francesca Lagerberg. We've got regional managing partners who are women. So we're looking to sort of do it on a role modelling basis rather than artificial targets. What is interesting, I think, about our business, and you referenced the graduate recruitment, is that our diversity statistics at the start point are probably the best in the industry. It's broadly 50-50 in terms of people joining our firm, and I know some firms would give their eye teeth to have that sort of gender statistic. I think the issue is making sure that gender statistic continues, that balance continues through the career, and we I don't think any firm's really got that right, but it's something we're trying very hard to deal with all the time.
And then just finally, what about yourself? This is your second term at the top of Grant Thornton. What do you see in your future?
I'm just looking forward to continuing doing this job for the next couple of years. I'm still really enjoying it. It's a fantastic job to do. Something different happens every day. And as I say, I enjoy doing what I'm doing. I haven't really thought about what's next for me yet, because I really don't want to start thinking about that whilst I'm doing a sort of full-on job here at Grant Thornton.
Plenty to do at the moment as it is.
Absolutely.
Thank you very much.